Happy Friday, happy Friday. How is everybody doing? Holy cow, my notifications are going nuts. Here we go. Let's go to notification settings. Let's turn those off so my computer can give me a second. I just need a second. All right, let's get going.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you want to live. Got questions? Here's the place to be. A TikTok live mortgage jubilee. Fix or float, we'll break it down. From city lights to your small town.
Good morning. Happy Friday, everybody. How's everybody doing? Glad to have you here. Hey, Kaja, you ready to join yet? You ready to come on as a co-host? You're more than welcome. All you have to do, actually, just to mess with you, I'm going to send you an invite. You don't have to accept it. If you're not ready, you don't have to accept it. But I'm just going to throw that on your phone and just let you know how easy it would be for us to bring you to a TikTok audience where we can talk about what great things that you have to offer for them. Glad that you're here. Happy Friday. My name is Kenny Murden. I am new to TikTok. I am not new to lending. I've been lending since 1999, and I'm a fantastic resource for both real estate agents and loan officers to help structure kind of those more complex deals. And she says, "Hi, Kenny, not yet." That's all right. Get comfortable with it. That's fine. It's really just like having a phone conversation. Little different, right? Because we're talking to an audience as well. But when you're ready, happy to have you here. But yeah, so basically, a good part of my work history is I've worked in kind of more of a sales managerial role where I was helping people structure, problematic files. Things where like if you're thinking, I don't know if I approve for a loan or not, right? You're uncertain. You might have heard no before, but you thought, maybe I might have saw something on TikTok that said that, maybe a lower credit score could happen. I'm that guy. I'm the guy that's going to be able to say, here's what approving looks like for you, whether that's right now or 6 months down the road. We'll be able to kind of make a path for you forward. And I'm also having some technical issues here. I'm just trying to open up my my pricing engine. If for those of you that have been here before, you see I don't like to just say that I have really good interest rates and all that kind of stuff. I want to show you. I want to show it here. Proof is in the pudding. So let me do this for you. Well, first I was just introducing myself as somebody that's able to help structure complex deals, as well as just answer any questions you have. So if you or somebody has questions about mortgage or real estate, share this with them or comment yourself any questions that you have, mortgage or pricing related. Just glad to have you here. And I want to now show you what I start every one of these things on, where I come on at 10 a.m. Central, Monday through Friday. There's a lot of exceptions to that if I'm out of town or if it's Thanksgiving or if it's Christmas or whatever the heck is going on. A lot of times that doesn't hold true, but 9 times out of 10, I'll be here 10 a.m. Central. So, if you like the content, please follow, like, share, all the things. But with that, I want to show you right above my head here, I want to just show you some live pricing. And so this is just kind of my way to just also check in with what are rates doing, right? Because this is the time of day where rates come out. Now I could go, I could Google the 10-year Treasury, and I could go and just kind of see, it looks like rates might have gotten a little bit worse. So you see that green, right after the 4.127. That green means that interest rates might have gotten a little bit more expensive today than they were yesterday. But let's take a look, because this is about the time where lenders are coming out with their interest rates. So I'm going to just do the same kind of deal that I do every day. An FHA purchase for a $400,000 house with 3.5% down, a 680 credit score. And just so you know, like, these are bits of information that I'll need to price out your deal if you have something that you want priced out. So 680 credit score. I'll say that the property's here in Texas, and then I'm going to take a look at the pricing. So let's hit submit. See what we find. Yesterday we were at 5.125. It's the same. All right. So at 5.125, it would cost us 1 point, which is 1% of the total loan amount. And let me blow this up for you a little bit so you can kind of see it. This loan amount here of $392,755. So 1% of that is just under $4,000 in total lender fees. I'm not throwing in any junk fees. There's no underwriting fee. There's no, the junk fees. We don't do that. At 5.125 for this FHA loan, it would be just under 1% in total fees. And then also looking at par rate might be, let's go, I have to make it smaller so I can kind of make changes to it here. But if I modify and take a look at, let's say, a 5.5% rate to see if, I'm just looking for something that has no points. So 5.5. So 5.5, no points, 5.125 with 1 point is what we're looking at for that case scenario. So interest rates are, even though it says here where there should have been a marginal increase in pricing, it's pretty similar to what it was yesterday. And the information that I follow, I have a service that emails me updates on interest rate all the time, and their advice was that in the very short term, interest rates might get a little worse, but then after that, they might level off and maybe come down a little bit. So who knows? That always sparks the conversation of when is it the right time? When is the right time to pull the trigger on refinancing? And I say if it makes financial sense for you right now, then that's the right time. If you're not saving a good amount of money, then don't do it. Wait for the market to get better. And if you're in that camp where you're waiting for rates to get better, we can still have a conversation where we decide, what does the right numbers look like for you? And so I have a program called Rate Watch, where I can put your information into it, and then let's let a computer follow what interest rates are doing. And then when the time is right, then it'll alert you and I to be able to do it. So if interest rates keep slowly getting lower, it's going to give us a heads up when it gets cheap enough for you. So if that's something where, if you're like me, you don't want to sit there and, focus on stuff that's outside of your purview. So if you're a construction worker, if you're if you're delivering stuff around town, focus on your work, focus on your recreation, focus on your family. Let's set this up so automation will look at what interest rates are doing, and then when the time is right, we'll be able to get the savings. So with that, I do want to go over again the benefits of refinancing just in general. If it makes financial sense to do so, to do a refinance, here are some of the benefits that every refinance has the opportunity to have. So for the people who are applying right now, even though I could get them closed by the end of the month, I would likely get them to close at the beginning of January. Why? Because rather than make your January payment, we're paying the whole loan off. So that is the payment, right? So you don't have to pay January. And then it collects the interest through the rest of that month, which is your February payment. So you could literally skip January and February. Your next payment is in March. And when your payments resume, because it made financial sense to do so, you'll be saving money every month thereafter, whether that's hundreds of dollars or $1,000 a month, whatever the case may be. We can take a look at that and determine what that is for you, what to do. Oh, and then also on your current mortgage statement, look at your current mortgage statement and look for where it says escrow balance. That amount of money is money that's saved up, ready to pay your property taxes and your homeowner's insurance if you've escrowed your taxes and insurance. And if that's the case, then you get that money back a few weeks after we close. So you're skipping 2 months. You're going to be saving, money, going forward, and you're going to also get that money back from your escrow balance. That'll just kind of reset your budget. And some people are like, I don't really need the extra cash right now. Let's talk about it. So you have, let's say, a budget surplus, right? If we're having monthly savings, what are the things you can do with that money? You can invest it. And if you're able to get a return on your investment and compound that interest or the growth in whatever investment account, compound growth typically will be a more explosive plan than paying down fixed rate debt. So if you're only going to save 5 or 6%, by paying off that debt, if you have no plan of investment, then obviously the next best financial thing is to pay off the debt, so you're not paying the interest. No problem with that. So I would say that would be number 2. 1 is invest, 2 is pay the debt off early, and then the third option is maybe you've been living on a really tight budget and you just wanted to enjoy life a little bit more, whatever that means to you. If that means taking a vacation, if that means buying steak instead of the hot dog budget, or whatever it is, like, you can use the money and enjoy it. Nobody is holding your feet to the fire on any one of those 3 things, but I would just caution with that third option. You definitely want to keep your eye on the ball, because you don't want to climb into more debt, right? So, because equity is finite and there's only so much of that you'll be able to access over time. So that's just kind of a word of caution there. But if we're having interest savings, especially if you bought a house in the last few years, or if you know somebody that did, chances are their interest rate is so much higher than where rates are currently that it'll make sense for them to move forward and save the money that's available for them to be saved. And if that's the case, then please share this with them and have them follow along. Follow the channel, reach out. My phone number's on the top there for easy access to call or text. Reach out anytime. So that's a little bit about refinance. But again, happy Friday. Glad you guys are here. If anybody has any questions, real estate or mortgage related, feel free to ask, and I will dive into it as people are kind of filtering in here. Again, my name is Kenny Murden. New to TikTok, not new to lending. Been lending since 1999, and I'm an excellent resource to answer any of your questions, because I spent a lot of my time as a sales manager. A little descriptor of what that looks like. I would be in a back office, amongst a floor of over 100 loan originators that would all be bringing me their most messed up deals that they didn't know the answer to the problem. It's a maybe. Is it approval or is it a denial? It's a maybe, the gray area. And so I would look at those deals, and I would help triage if this is something that we would be able to fix and save, or if this is something where we need to make a plan, deny it today, but make a plan for when they'll be able to approve down the road. And so that's kind of where I cut my teeth, as being, an expert, I guess you could say. But that makes me well versed to answer any questions that you have. If you're thinking about buying a house, if you are thinking about refinancing, what I like to do is present options, especially on the refinance side. I like to present options and kind of like say, hey, here's a couple things to consider, and that way, it gives you a little bit more than just, maybe maybe you don't know that the 30-year fixed is right for you. Maybe there's a different program that works better for you. So we can kind of explore those things, if you just don't know what's available or what exists out there, or if you're looking for a specific, thing where, hey, I'm worried about my credit, or I don't have a lot of down payment, or my income is hard to calculate, and so I got turned down before. Those are kind of like the main things that I run into. So if you fall into any of those buckets, or if you're just like, hey, I want a fantastic deal, this guy seems to be, sharply priced, as I pointed out here. Like, if you have a deal that you want me to price out, I'll price it out live right now, right here, right now, so you can kind of see where interest rates are at and what it would look like for you. Vicky's asking, how have you found the most success at getting new realtors on board? Vicky, I'm assuming you're asking from the lender perspective. And if that is true, if you're a fellow lender, first off, thank you for being here. I have something that I teach. I call it the Z-Lister method. Now, there's a program that you can pay for, and I'll give you free access to it, to be honest. If you reach out, I'll give you free access to it. It's called Z-Lister. And so what that is it's a simple program that takes Zillow listings, and it allows you to very quickly, using automation, repurpose that Zillow listing on different things in Facebook, whether it's Marketplace, whether it's groups, whether it's your personal page, whatever it is. It'll just take that listing and post it there with all the description information right there. I'll show you just a couple tweaks that I would do to that. And then you can also, with automation, go into Craigslist. So that gives you, if you have permission to repurpose a listing, and actually I'm going to be doing this, I haven't decided when, but I'm going to be doing this live for loan officers to watch exactly how I do the Z-Lister method. Because that's the tool. That's what the tool does, and that works because it gets you in front of a bunch of buyers, and they're going to, maybe want to apply with you to buy that house. Maybe they already have financing. Maybe they already have cash, and that's how they're going to be buying the house. If that's the case, you still get to be the conduit to hand it off to the real estate agent and foster a new relationship with that real estate agent. But when I call it the Z-Lister method, what I do sales training on every Tuesday at noon Central is that I'm showing you how to take this tool and how to foster these new relationships with real estate agents by providing them value. So it's a whole bunch of positive touches. You get to reach out to real estate agents, and you're coming out and you're helping them. You're helping them by, saying, hey, can I have your permission to, put this out on these other platforms and see if I might be able to generate some more buyers. And that's something that a real estate agent can then say, hey, I've partnered with people that are going to help us market your property. It's just a win-win, right? Everybody's moving in the same direction, trying to, do the same thing, which is sell that house, help somebody buy that house. That's just our job. That's what we do. So that there's a lot of ways where I make inroads using just that simple tool. And so that's what I go over in the method, where it's like there's probably 20 ways that I go in and go deep on helping those real estate agents. But there's another thing that's specific to my team, where I recruit loan originators and real estate agents, where we can talk more in detail about that. But typically all I say about that on here is, if you're a real estate agent, if you're a loan originator, reach out to me and I'll invite you on a free trip up to the UWM headquarters. I'm going to be there next week. We're going to have a huge group of real estate agents up there next week, and we're going to have a great time. And that's basically what I'm offering. It's just a free trip. There's a little bit of a, think of it like a timeshare pitch, right? We're going to try and convince you that what we're doing is the best thing out there, but we know it's not one size fits all. But if you want to go have a free plane ride, free hotel stay, free light entertainment with an open bar and a little, sometimes we might be throwing axes and, having fun activities, that kind of thing. That is there for you. And then it gives you the information. It also gives you time to just kind of like hang out with us and see if that's a good fit. So, but that is another way where you're able to develop those relationships with real estate agents, where you're able to, as a loan officer, offer them some of these benefits that they're going to get going there. Let's see, our fee sheet standardized arrive form. I mean, I think a lot of them look different, and I think that's what you're asking. So like, there's federal forms like a loan estimate and a closing disclosure, but our fee sheet's standardized. I mean, they have all the same sections, but they look very different, and they don't have. I don't think. I'll pop into my arrive. What I'm going to be looking for, Sel, is I want to see in the lower. Sorry, I just got to look at my face here. Hi, laptop. Yes, okay. On the lower portion of the fee sheet, I'm wondering if it has like a federal code on it. Kind of like the appraisal is a 1004 and a loan app. The URLA is a 1003. So if I click in here. And I can't share this because it has has personal information, so I can't share what I'm looking at right now. Otherwise, I totally would. Let's go review fees, continue. Oh, sorry, this one was not an active file. So if I go to this one, will do it. Review fees. And then I want to print this thing to PDF. And scrolling down, I gotta blow this up. I'm blind, you guys. I tell you, you get into your 40s and you start putting on the cheater glasses, because holy buckets. Yeah, I don't see anything on here as far as like a federal code. So yeah, I think lenders probably just have flexibility to kind of redesign. They probably need to have, they're segmenting out lender fees, third-party fees, whatever. They don't call it Section A or B or C. At least it doesn't in this arrive form. So I'm going to go ahead and say no, but obviously they need to have all the right information on there. But I really like the way Arrive's fee sheet makes it look really clean, where it says, here's your payment, here's how much you're going to bring to closing. Like, that's the visual part of it. They did a really good job on our fee sheet that way. So I'm a fan. I am a fan. Hope everybody's having a fun Friday. I'll share a little bit about what I got going on. After this, I get to wrap up a couple things here at work, but a couple of my high school kids are at a school where they do not have school on Fridays. They have a 3-day weekend every week, so 4-day, school week. And so I'm going to be bringing my daughter to the mall and doing a little bit of shopping. So looking forward to that. So feel free to share whatever you might have going on this Friday or this weekend. If you have anything exciting, shout it out. But again, if you have any questions about mortgage or real estate, by all means, shout that out as well. And then, like I say, I'm on here Monday through Friday, 10 a.m. I've been skipping the 4 p.m. Thing, so I would normally say, hey, I'm on 10 a.m. and 4 p.m. But my co-host for the 4 o'clock has taken the month off, and I don't blame her. it's December. It's a lot of us are. Hey, I appreciate the likes. A lot of us are, taking some time for family for the holidays. Some of us are in more of the holiday spirit than others, and I hope that's you. I hope you're having a wonderful season with it. I know my former state of Minnesota got blasted with snow. Can you do a 3-2-1 buy down on a Fannie 30-year? Yes, it requires 10% down. So if you have enough down payment, the answer is yes. Otherwise, that's the only limitation that I know. Let me see if I'll throw it into my guideline thing here and see if there's anything else. What are the requirements for a 3-2-1 buy down? Damn, homeboy knows his all regs. Yeah, been doing it a while. Let's see. Investment properties are not eligible. Qualify. Yeah, I think that's really the only thing. And then for those of you that don't know what a temporary buy down is, that's where if there's a few different ways to fund. Let's see. I think my question is getting filtered. Let's see. Do you give advice on real estate investing? Yes, I have a very unique way for real estate investors to pick up property for little to no money down, and that's kind of a pretty sick trick. We'll talk about that here in a second, but I wanted to explain what a buy down is, a temporary buy down. And so in a 3-2-1 or a 2-1 buy down, what those numbers represent is the first year of the loan. It's going to be, in the case of a 3-2-1, your first year, your payment's going to be 3% lower than the rate that you started with. So if you're at, let's say, a 5% interest rate, you're going to start off at 2%. And then the following year, it's going to go up 1% and then another 1%. So it's the first year you're saving 3%, then you're saving 2%, then the third year you're saving 1%, and then it's up to the market rate. So that works really well if you have something coming up where you might be making more money in the future and you're not making it right now. Definitely plan accordingly, because I would not just do it if nothing is changing on your income and you know you're going to get kicked in the teeth for 1% increases the next few months, or the next few years, I should say. Just be aware of that, because I know I don't get the phone calls where people say, hey, Kenny, thanks for saving me all this money on this 3% savings. But they do give me the phone call where they're like, oh, my payment went up. What happened? And I'm like, yeah, remember when I said we're going to get kicked in the teeth a few times? We just got kicked in the teeth. So that's something where I'd like to have a little bit of awareness when we're going over the temporary mortgage rate buy down. Can a seller contribute to the cost of the buy down? What is the max seller can contribute? That's going to, yes, they can contribute to it, but that's going to depend on, is it a primary residence? Is it a second home? Is it an investment property? Investments, they can only contribute 2%. A lot of times they can contribute 6% if it's, a different, primary residence type of a thing. Sometimes they're capped at 3%. It depends on the loan program. But the idea there is we can purposely design the offer around making the financing great. Meaning if the house is, let's say you're buying the house for $500,000, but we can, thanks for the follow, by the way. But let's say the house can appraise for more. We can essentially finance that, that seller concession by saying, hey, if I pay you an extra $10,000 or $20,000, would you contribute it back to the financing? They're going to end up with the same net money back. So obviously it's really easy for them to say yes. They're selling their house. you're buying it and you're just getting a better term. Yeah, you net the same to the seller, absolutely. But now, let's see, can the cost of the buy down be written off on your taxes as a bona fide mortgage interest? I don't know the answer to that. Let me see if I can copy. Are you answering the question is yes, they can write that off? That's good to know. I definitely shy away from the tax thing. I always do the obligatory, like I'm not a financial advisor anymore. I'm not a CPA. I don't do tax advice, all that kind of stuff. Exactly. Yeah. No, I mean, in a lot of information, we just know through osmosis. Let's see. I don't know if my message was filtered. Can I ask you something in a DM later? Absolutely, yes. But you're the one that asked about the investment. I got a newborn, and he's a bit demanding right now. Okay. Well, reach out to me later. I'm going to go over right now what I was going to say about investing. So if you find a motivated seller, it's not so much about the property, but it's a motivated seller who's willing and able to hold back 40% of the purchase. So they're willing to self-finance 40%. What that looks like is this. Let's say we're buying a house for $300,000. You're able to say, I'll give you $180,000 right now, and I'll make payments on the remaining $120,000 to buy your $300,000 house. They'd have to be motivated to do that. They'd probably also need to have very little money borrowed against the property to agree to that. So is it common that they will accept those terms? No. But does it happen every day? Yes. Okay. So if they're willing to do that, we can get that house for very little to no money down. They'd have to be okay to be in second position and have equity. Correct. So, and El Toro, just so you know, like this is exactly how I do it. I just do a DSCR loan that is 50% loan to value. We still need to figure out that 10%. That's why I say little to no money down. So they're holding back 40%. We're financing 50%, gets you to 90%. Where's that other 10% come from? That can come from literally anywhere, because at 50%, this lender doesn't care where that money comes from. They don't source it. They don't season it. So you could get private financing elsewhere and then fully finance it. Or you could get it as a gift from a friend or family member. Or you could pull the cash out of literally anywhere. If you have, if as lenders know, it's hard if somebody just has cash, literal cash in their house. We normally have to have you deposit that into the bank account and wait 60 days before we'd be able to use that cash. So there's tricks to that. If you have cash and you want to use it in a loan sooner than that, I'm not going to tell you how to do it here, but I will certainly consult with you one-on-one on how to solve that problem. Let's see, what's the difference between conventional and debt service ratio loan? So just conventional, we'll say traditional. So traditional underwriting for your income is they will take a look at your let's see, I sent you a message, but it's saying I can only send you one before you accept. Okay. Well, do me a favor. Also text me. Rather than if the direct message is not working, text is my main form of communication, just so you know. So just text me the word investing ? And I'll remember that we talked. But the question of what's the difference between traditional underwriting and DSCR? Yes, it's the 651 number. Traditional underwriting, they're going to look at your tax returns. You're going to look at W-2s. They're going to be looking at, what income you have, and they're going to see, does that justify the ability to repay the debt of the new loan? DSCR, debt service ratio, what that is doing is that's taking a look at, you're buying this investment property, so you're going to get a new income stream in that property. You're going to get a renter in there. So we're going to take a look at what the rent is on that property, and does that qualify the loan? And if so, we don't need to look at any of your income. So even if you don't have an income, you can become a real estate investor. And if you do it this way, where you're finding motivated sellers, you can buy a ton. Got the text message, by the way. Thank you. You can buy a whole bunch of properties. So if you're buying a whole bunch of properties where you are even getting just a little bit of cash flow in each one, eventually, you're going to be hopefully gaining equity. Hopefully, rents will increase. Maybe you're going to, fix up the property. One trick is you don't have to rent them the garage. So there's a lot of ways to repurpose the garage space. You can be rented as storage. It can be rented out to a handyman that wants a little shop to be doing some woodworking. There's different ways that you can maximize the income on a property, or you can use the space yourself. I've seen I had a guy flip couches. So he would go and pick up the free furniture off of Craigslist and Facebook Marketplace, bring them back to. He just needed a place to work, right? What better than a garage that was nearby, that it was his investment property. He went over there, reupholstered, restuffed them, whatever you do, I don't know, but he did a good job with it and actually made some pretty good money, not only reselling new looking furniture, but then his little tweak to it is he had a pickup truck and did an extra $75 delivery fee or whatever. So there's a lot of different ways you can utilize space, and just think outside of the box on how to maximize your return on the investment. 60-day seasoning is nothing compared to a 360-month loan. Yeah, but it can affect things, right? The seller might not hang on. If your offer is less desirable than the next, you want to be as pretty of an offer as you can if you want to get the property. Let's see, our DSCR loans sourced and seasoned, and how long do you have to have reserves? So sometimes yes, sometimes no. In the example that I was giving, they do not require source or seasoning for this deal, where we're only doing a loan at 50%, right? And then we're asking the seller to carry back 40%, and then we're either private financing or we're doing something for the other 10%, whether it's a gift or cash on hand or whatever. Typically, when you buy an investment property, you're looking at putting 20% down. So there are some non-QM loans where, and that's just a new way of saying subprime. If just it doesn't matter what the term is, but there are some that will allow you to go 15% down. But this way, it allows you to finance with only 10% down, and they don't check to see if you're borrowing that money from somewhere else. So call Kenny before you start making offers to make sure you have your pre-approval. El Toro, God bless you. Happy Friday. Thank you for being here. I appreciate it. So yeah, that's, sometimes yes, sometimes no on the sourcing and seasoning of the funds required to bring to closing on a DSCR loan. Typically, if you're putting 20% down and you're getting a DSCR loan, typically they're going to want to source and season that for, again, different investors have different rules with it. Some of them want to see 60 days, some want to see 30 days. So we can take a look at all of those options. What I do is I look at your loan application, and then I apply that against over 200 different lenders to see what's going to be the best fit for you. What is the difference between pre-approved letter and pre-qualification letter? It's very simple. It's this. So the process starts with a loan application. Whatever you put on that loan application, I'll take a look at credit, and if whatever you said you make at your job or whatever you said you have available for down payment, if that all qualifies, congratulations, you're pre-qualified, okay? Now, the next step is I'm going to ask you, let's prove it. So send me your income documents, send me your bank statements, and let's make sure that these numbers are correct in the loan application. Now I verified the numbers and I know that this is going to approve. Congratulations, now you're pre-approved. And that's why most people want to look at a pre-approved letter, because it has some level of scrutiny to it. Now, a loan originator is not an underwriter. So we can take it a step further, and I can take your loan application and I can submit it to underwriting. And an underwriter will look at it, verify your income and your assets and your credit, and then they do a verified approval letter. So that would still need, once you find a property, you'd still need the appraisal and the title work done on the property, so you get that set up with your escrow company and your title company. So there still takes a little bit of time to do the underwriting, but the underwriting already being done ahead of time could save you time. So if you wanted to submit a stronger offer when you go to purchase and you want to offer the seller that you can close quickly, that's an excellent way to do it. So something to think about there as well, as far as just kind of, again, making your offer the prettiest offer for them to pick from. Is it dependent on loan to value for DSCR? Yes. So for sure, if we do the 50% loan to value, then I can go with a lender that's not going to require sourcing or seasoning of the assets, right? If you put the 20% down and you're going with one of these, and actually you can still, it's not one or the other. There's a whole range of options. So let's say you had the 10% down, you can do 80% financing, have the seller carry back 10%, and then you'd still have to come in with 10%. So those are ways where you can pick up more property with less money down. But is that for refinance? You can refinance with a DSCR. I guess I don't really understand your question there. So if you could rephrase. But I think the answer to your question is the LTV, the loan to value constraints are the same for refinancing and purchasing, where you're going to be constrained at you can finance 80% of the appraised value with the DSCR part of the loan. Now you can also have the seller carry back that 10%, and then you can figure out the other 10% for the down payment. I'm basically trying to solve the problem of how can I get you more real estate with less dollars out of your pocket. And so we've done that with the 50% loan, the seller carrying back 40%, and then you can literally borrow through a private loan or other means that remaining 10%, because it's not going to be verified where it came from. DSCR guidelines for LTV also apply to refis, right? Yes. So if you're refinancing, you can borrow 80% of that appraised value. So let's say you improve the property, or you've owned it for a while and inflation's still relevant and home values went up. For whatever reason, the home value went up. You're able to refinance that and pull that money out, and you can keep the extra. A lot of real estate investors, years will go by. Let's say you pick up a whole portfolio of 20, 30, 40 properties that you've been managing for years and years, and some of them will have less debt on them than others. And so you're going to be able to tap into that debt by refinancing it and using that money to live on, or to use it to buy more properties and kind of keep the BRRRR method, the buy, repair, rent, repeat. I think that's what it is. You're able to do that method to just kind of continue to build out your real estate portfolio, with the idea being eventually the debt gets paid on it and rents are going to continue to increase. And so, I mean, real estate investing is a very, very safe and effective way to develop a good means of retirement. So if you're, I'd say my age or younger, something to consider. Meaning that 50% LTV, there's no sourcing or seasoning or reserve requirements. Correct. So that's the advantage on being able to do it that way, where you're able to borrow the down payment and they're not going to check it. They're not going to block you from being able to buy a house by doing it that way. So that's the advantage of going down to the 50% loan to value. Yeah. Whereas if we wanted to borrow more money, right, from the traditional lending source, then they do require to know where the down payment is coming from. And they want to source it, meaning where is it coming from, and they want to season it, meaning how long have you been holding on to it? Because the seasoning part is specifically asking the question, were these funds borrowed? So they want to see if you have a recent large deposit and then you didn't have a monthly payment to, ABC Bank last month, but now you do. That's why they're looking at 60 days or 2-month requirement to season the money that you have to make sure that you don't have any new debts going out. So that's really what the underwriters are asking. That's like the root cause of the questions when they're looking at sourcing and seasoning assets. So this is fun. I love that the topics have all been on more one topic, because a lot of times I'll be on here and somebody will want to be talking about who knows what, HELOC, reverse, primary residence, VA, so this is kind of fun where I have participation of a few different people asking about real estate investing, which is a great thing. Like I don't personally have it. I just have the one extra house that we do Airbnb short-term rental on. But at one point we did have, I believe 12 at one time. And so it's not something that I just say is a good idea as a passive observer. It's something where, I did it. We bought a bunch of homes, we rented them out, we sold them for profit, So, I mean, I was advantaged by it. And so I can give you the good, the bad, and the ugly. Like I got the 2 a.m. phone calls, my daughter or my son flushed a Barbie's head down the toilet and it got stuck, and now the thing is backed up and I had to go pull a toilet. And I didn't have to. I could have paid somebody else to do it, but I went out there and I physically pulled a toilet that was full of dirty water, and it's kind of gross, right? So that's the ugly side of real estate investing. Our VA rate's good and going down soon. So what I'll do to show you VA rates is I'll price it out for you right now. And so rather than asking you your current situation, I'm just going to throw one in there. And I will say, good morning, happy Thursday. How's everybody doing today? Let's get it started. Sorry about this. Gotta find where the noise is coming from and stop it. All right. All right, going back to pricing out a VA loan, I'm going to just say, I'll look at what you got here. 489.9 home with 720 credit. What state are we in? 489.9. And I'm assuming 100% financing, right? No money down. Florida. Just going to take Florida zip code. It can be any zip code in Florida, just FYI. Copy that. paste it. And price. Let's take a look. So I'm going to modify and go to rate and look at 5.25. Looks like FHA is pricing a little bit better than VA. So yeah, at 5.25, we're paying 1 point. And there's no other lender cost there. There's no underwriting fee or junk fees in the section A of what we'd be pricing out there. So 5.25, 1 point, which is just under $5,000 because it's 1% of the 489 loan. And then if we want to do no points, let's take a look where we're at for 5.5. Yeah, so 5.5 gets us to no points. So those are, I like to just quote those two things. That's generally let me zoom that in there so you can see there's all these different lenders, that price out with this tool, and the cheapest one is on top. So as you can see, like here, UWM is the lender at the top of for that loan option. But if I modify it and then I go to the other lower rate, then it's a different lender. So Veterans United offer me $599. I'm confused. Yeah, basically all that is, that's pretty typical. They're, I'm curious at $599, did you have an underwriting fee? Did you have any lender costs? Because my guess is yes. And the confusion would just be simply, they need to make more money on each loan than I do. I mean, there's two things that come into, like the bond market is all the same interest rates. So they're going to price out their profit margin that they need for their overhead. I'm a wholesale broker. I have very little overhead. I'm coming to you live from my house, right? My home office. So I don't have, office rent and all the utilities and all the extra expenses that I'm sure they have a very nice building, but nothing's free. So they have their profit margin that they need to get for operating costs, and then they have the commissions that they're going to be paying their folks. I also reduce the amount of commission that I take because I want to offer you a stellar deal, and I'm more focused on volume, helping more people than I am, making you the meal ticket and just doing fewer and fewer transactions. It's two different philosophies. So if you're looking for a really good deal, reach out and I'd love to help you. Let's see. Do you think it's a good idea to take out 50% LTV for investing? And I want to also go back to 407's question on, where I think rates are going to be going. I would say I think they're going to trend down, right? But if you're buying a house, I would rather lock in a good deal on a house right now than locking in an interest rate. Because if interest rates are going to go down later, you can always take advantage of that later by refinancing. But if you're able to get a really good location, a really good house for a price that you're comfortable with, I would lock that in. And then as far as if you're looking at refinancing, then I look at what is the benefit now, because it's probably going to make sense again down the road, and you don't want to just keep refinancing and repaying closing costs. So we would take a closer look at refinancing. There needs to be a big enough benefit to do it now rather than waiting, because waiting is probably, in a lot of situations is going to make sense. The only time where I'm like, oh, let's absolutely do it is if somebody's carrying, $80,000 in consumer debt that they're paying 20% interest on. Now they have like the house is on fire. Let's put that out. But if it's just like, oh, my interest rate's this, what should I do? I'm just going to save, a couple $100 a month. You're not even going to feel it really. So, I mean, that's the stuff that I would wait on personally. But I'm also going to give you both options and let you decide. So awesome. I'm looking at the time here. I got a few minutes left for any other comments, questions. Again, I'm on at 10 a.m. till 11 a.m. Central, Monday through Friday. Happy Friday. Hope everybody's going to be heading off into a fun weekend here. Stay warm. Man, it got cold yesterday in Dallas, Texas. I got to tell you. Let's see. How should I move forward? I'm under contract. However, I want the best deal. Reach out. My phone number's above. Reach out and just say best deal, and I'll remember who you are. You feel like you're stuck with Veterans United, we can discuss both options. You can stick with them, no problem, or you can transfer the appraisal. You can, it's super easy to do a VA deal. You're not, trust me when I say you're not stuck at all. And that's the same thing with me. Like, that's why I need to be really price competitive, because I know how competitive it is out here. And so if I'm not giving you the best deal, somebody else can, I can start, working with somebody, and we can get all the way darn near the finish line. And if they get a better deal somewhere else, I would expect that they would go across the street and get the best deal, because that's what's right for them and their family. Let's see. Micah says, my broker offers to pay closing costs if I refi later, so it doesn't cost me anything. Do you offer? Basically, think about how are they paying for that, right? So they might be saying, if you're going to come back as kind of like a loyalty thing, I'm going to discount what I would have otherwise charged you, right? That's really what they're saying in that statement. What I do is I charge a very, very low, aggressively low price to everybody always. So that means I don't have anything more to cut to give you a better deal. So I would just, think about what they're saying there by offering that. It sounds great. There's a lot of ways to say things in marketing that are going to appeal to the human psyche, but I would say look at both sides of that statement. I would have to restart the full process if I want to switch. So you would have to submit an online application, and I would send you disclosures, and you'd have to click through them. We could do it literally today. It would not take a lot of time. He charges 150 basis points and takes it out, that he said. So that's good. 150 basis points is aggressive. I like that. It's they're not being greedy. So maybe they are giving a good deal, and then they're also sweetening it for for a loyalty effect. And if that's true, then they're and if they're not padding the margins on their correspondent line or whatever, there's a lot of dirty games that lending plays, but if that's true, they're giving a really good deal and they're focusing on volume. They're doing the same thing I'm doing, and so I'm going to applaud it. I think it's the right thing to do. How long does it take to get a formal loan estimate? Well, technically we have 3 days, like by law, to get that out. But could we do it in 20 minutes? Yeah, we could do it that quick. So it just depends on, like I get an email alert, when I get the loan application in, because I'll give you an online link. You'll fill it out. It'll say, hey, they started it. Hey, they finished it. I'll go in, run credit. I do a soft check on credit, just FYI. And then I can say, hey, this is what the quote looks like. And then, I can send that out. I typically send out a fee worksheet, but could I send out a loan estimate? Absolutely. What I typically do, though, is I'll take that application, I'll submit it to I'll register with the lender that we're going to choose, like the pricing that we're going to select. I'll register with that lender, and they have different turn times on how quickly they get it out. Sometimes they do it same day, sometimes they do it the next day. But that's I believe, a full answer to that question. And I'll stick around for a couple more minutes. We're after the hour right now, but as we're asking questions, I have no problem hanging out. I don't have any like burning fire things that I have to do right now. I do have a few loans to submit here, but if there's any other questions, I'll just say last call and hang out for a couple more minutes. Otherwise, I'd say thank you guys so much for the participation. This has been really fun, and I hope everybody has a warm and wonderful weekend. Get out, do something fun, enjoy life. This is the holiday season, so hopefully you're in that spirit and you're enjoying all the season activities. If I wanted to see what you could do for me and my family, if we wanted to get numbers, I would just text me to the number that's on top here. And if you text me, I'll send you my loan application link. If you fill it out, I'll move it along. And obviously, if you're at 599 and you're going to be looking at 5.25 or whatever, you're going to make an easy decision there. Then we can move forward. But that's the process. That's how it works. So appreciate everybody being here. That's it for me for today. I don't think I'm going to be back on at the 4 o'clock. Let's see. I'm currently under attorney review, so I'll text you shortly. Awesome. Appreciate it. Our closing is January 14th. Would it make everything slow down? It would not slow anything down. Hopefully they already ordered the appraisal. And the way that you order the appraisal with a VA loan is you have to go through the VA portal to request a VA appraiser to go out there. What we would do is we would transfer the case number. So it's literally like you didn't lose a single day. And, I can get clear to close in, I think my quickest VA clear to close was something like 13 days. So we got plenty of time, even with the holidays and everything. But that's one thing to look at right now is the holidays, because you're going to have not only days that don't count for business review for mandatory things like getting your closing disclosure out. Some of those days aren't going to be relevant as review days. And then you're going to have people that are going to be taken off, man. Everybody, appraisers, title company folks, everybody takes off this time of year. So that's where the loans that I get in, I'm just like, man, let's put our foot to the gas pedal and get this thing clear to close so that we can close whenever we want to close, not when we have to. I don't like getting rushed at the end, doing that whole song and dance. It's just not my cup of tea. I've already lost enough hair to have to wear a hat on these things, so I don't need to lose any more hair over it. But that's just kind of my approach. So, but with that, I appreciate you guys being here. Thanks so much for all the participation. If you like the information, follow the channel. If you think it's going to be helpful to somebody else, I'll go in. If you look at my channel, I clip these up and I repurpose them. So thanks for the follow. So if you have anybody that you think might be interested in, buying or refinancing, share this with them. It also helps out the channel, gets me in front of more people, and I appreciate it. Can the pricing change from a soft credit check to a hard credit check? Yes, and here's why. When I do a soft check, I'm looking at one credit bureau, right? But when I do a hard pull, I have three numbers that I throw out the high, I throw out the low, and I use the middle score. So if that number is drastically different from when I do a soft check, it can make a difference. So if it's marginal, let's say it's somewhere in like the 500 or 600 scores, that's where there's a higher likelihood of there being some changes there. But oftentimes if I pull a soft score and it's like 750 or something like really good, then no, it's not. There's very little chance do I ever see any change on that. But it's the folks that have, credit challenges where it's more likely to have something change on them. So hopefully that makes sense for why it is that way. And then the last thing on credit, I do always have the ability to offer you a free rapid rescore, a free credit upgrade, or however you want to call it. What we're doing, let's say you have a 699 credit score. Your score is good enough, right? But that one extra point is going to save you maybe $500, $600, $700, $900 on your closing costs. Why wouldn't I want to give you that savings? So if I can get you that extra point, I'm going to do that for you for free, and that's just a value add that I want to make sure that you're getting the best deal possible. Like every little tip and trick that I have that I can help you get a better deal, that's what I'm all about. Like I'm a very cheap individual. I'm good at shopping for the best deal, and that's what I'm going to do for you as well. And so I thank you guys for being here. I hope to see you Monday, and we'll do it again. And appreciate it. Have a great weekend.